So we were talking about the series of AFBs going on, and we were talking about the various modules in terms of the MCQ. So let's quickly move on and understand more concepts of AFB. Okay. You can look forward to our classes on our app. There you can find all the details regarding it. You can use the code Y541 to avail a discount of 77%. So there on the module you will find all the details regarding the examination as well. So let's move on. If you find our classes important and at the same time useful for yourself, all you can do is you can check out our app as well, or the website, and along with that, don't forget to subscribe our channel Adda 24/7 and click on the bell icon so that you can get the notifications as well. Now let's look forward to the next point. We have started with our batches. The upcoming batches will be released soon. We are starting with another batch of PPB, AFB and LRB English medium from September 12th, 2022. Along with that, another batch would be starting, that is another batch of the bilingual batch. For this would be starting from 5th of September. So you can also look forward to that particular area. Right, from 5th of September, a new batch is starting for bilingual. This one is the timing for this one's the timing regarding the English medium batch. For the bilingual batch, the date of starting the batch is 5th of September. So go ahead and register yourself, and then you can join the live batches, because once you start with the live batches, it is better because you get a better interaction with the teachers who are teaching. At the same time, you can learn it again and again. The live classes are also available in the recorded form, so you can also learn from the recorded form, because sometimes what happens is the first time when you go through a particular content, you are able to understand it, but you still need more practice. So you can definitely look forward to in terms of the recorded form, right? So kindly go ahead and check it out. The bilingual batch is starting from 5th of September, while the English medium batch will start from 12th of September. Moving on. So let's look forward to the first question. The first question says, Zen Limited has decided to invest in a project which would provide them the following cash flows, and the initial investment was 25,500. So then this particular question, this capital budgeting there, we are given a particular initial investment is of 25,500, right? And the PV factor according to this area is 10%. So you need to tell me what is the NPV. Okay. NPV of the project. The question is incomplete. Kindly complete it. Project is, it's rupees 541 negative, 541 positive, 6047 positive, or 6057 negative. When we look forward to this area, that is US code 5, when we talk about the area of the cash flow, then the cash inflows that they have received is, the cash inflows for the first year was 6,000, second year it was 8,000, third year it was 7,500, fourth year it is 4,000, it's 7,000 for the fourth year, and for the fifth year it comes out to be 4,000. So if you're having a calculator in your hand, all you need to calculate is the PV factor. How do we calculate the PV factor? To calculate the PV factor at the rate of 10%, because it's given, it is 10%. So what you need to do is, on your calculator, kindly type 1 divided by 1 plus 10% raised to power 1 for the first year. Then for the 2, it would be second year. Third year, it would be 1 raised to power 3, 1 raised to power 4, and 1 raised to power 5. How do we calculate it? Basically, what we do here is, on your calculator, just type 1 plus 10%. So this particular bracket would be 1.1. So just write it on your calculator, 1 divided by 1.1. This particular amount will come out to be 0.909. So now you have to divide it by the square of 1.1. You don't have to write it again and again. Square for that. You don't have to find 1.1 square and then divide it. No. All you can do is the value where it came out to be 0.909. Stop right there. That means 1 divided by 1.1. So once you do this in your calculator, next point is, after dividing it, that is 1 divided by 1.1, the value comes out to be 909. Click on equal to again. Follow these steps on your calculator. 1 plus 10%, that will give you 1.1, and then 1 divided by, okay, you can write 1 divided by 1.1. Whatever will come out, that amount that will come out be 0.909. So from now, click on equal to again. That will give you 0.826. Next one would give you 751. So calculate the PV factor according to this. This is the value. That means when we talk about the time value of money, over the period of time, you'll find it goes on decreasing. The trend is basically like that only. If it is 1 rupee today, after a particular period of time, it turns into 0.909. Then if we look forward towards 2 years down the line, it will be 0.826. So it's going to go further and further, right? So when we look forward to the answer would be 541 negative. But how do we get this particular answer is shown here, right? So 6,000, 8,000, 7,500 and 7,000 and 4,000. Those are all the cash flows. So from the cash flows, we have the discounting factor 0.909, 0.826, 751, 683 and 621. These are the discounting factors. So multiply it and you will get the values here. These are multiplying column 1 and column 2. Once you multiply both the columns, you will get these figures. Once you get the total, how do we define the NPV there? If in case you're dealing with for the first time, whenever we talk about the net present value, see, the point is the money that I hold today, the value of it won't be the same in the upcoming time. See, the point is, at this point of time, I have 1 rupee in my hand today. I can buy more from 1 rupee today than after a year. That's one of the hardcore realities of life. The inflation, then the purchasing power, multiple things affected. So basically, we consider that part in terms of net present value as well. The present value of these particular things here would be, if it is 1 rupee today, after an year, it would be equal to 0.909. Then it would decline to 0.826, then 751, then 683 and 621, considering today in your mind. So if it's 1 rupee today, it is the value that goes on decreasing. So there we multiply these terms, and then if it is 6,000 after an year, but the value is not 1 rupee, it's 0.909, it will give us 5454, then 8,000, that will give 6608, then 7,500, that will give 5632.5. So consider 24,959.5, and it is 25,500. That was the initial investment. So from this cash inflow, this is the total net cash inflow that we are receiving. Net discounted cash inflows is 24,959.5, while we had 25,500 initially invested. So you have to find the difference between the two. That will be a -1 because you are getting less, but you have paid more for the project. So then it would be negative. And one of the basic things that you need to remember is, whenever we have a negative NPV, that means in the project we have given more and we have received less. It's better to reject that particular project because it will ultimately lead to more losses, right? So that is what we'll do here. Now let's move on. Question number 2. The question number 2 is again from NPV. It says, what is the NPV of to the nearest rupee for the following situation? The firm expects NPV of 10,000 if the economy is exceptionally strong, it is 40%. Then NPV of 4,000 when the economy is weak, and then we have exceptionally weak at that point of time. Then normal and weak, it would be 20%, and the amount is 2,000. According to you, that is -2,000. This value is -2,000. Right? So they are asking you about the expected value of NPV. That means you have to find the ENPV. For ENPV, what will we do? All we need to do is multiply it by the probability. Nothing big. The concept is absolutely simple. The expected net values would vary because the probability is there, right? So what we do here is we have 10,000 multiplied by 40%, there we have 0.40, then the second one would be 4,000 multiplied by 40%, and then we have last one is 2000, but it is negative. So I'll take it negative 2000 for 20%. So how do we calculate the answer? The answer would be 4000 here, and then 4 4s are 1600 here, and then we have a negative figure of 400. This will come out to be 5200. The correct answer is 5200. This is expected NPV. Now, moving on to the next point. If we have the debt equity ratio, equity share capital is 20,000, the reserves are of 5 lakh, debentures are of 10 lakh, the current liabilities 8 lakh, debt equity ratio will be, what will be the value of debt equity ratio? When we talk about the debt upon equity, it is only the long term debt, right? We have divided by equity. Now, how do we calculate it? For this, we have only one long-term debt, that is 10 lakh. Debentures are long-term loans, na? So that means we have 10 lakhs here, and then we divided by equity share capital of 20 lakhs plus 5 lakhs. So it is 20 lakhs plus 5 lakhs here. What would be the value then? 10 lakh divided by 25, that will be 0.4:1. Again, when we talk about the ideal debt equity ratio, they have lesser amount of debt, right? They have more of their equity. That means from the point of view of financial risk, they are in a better off position. But when we talk about the tax planning there, they might fall behind because they do not have interest as an expense, right? This is about the area to be covered. So now question number 3, this is from the AS2, Accounting Standard 2, that is regarding inventories does not include. The inventories does not include what is held for ordinary sale, in the process of production for such sale, in the form of material or supplies to be consumed in the process, in the rendering of services, or work in progress arising in the ordinary course of the business of service providers. In terms of AS2 or the Accounting Standard for inventories, we have ordinary course of business, production, as well as for the supplies that are to be consumed. But one thing it doesn't have is for the service providers. This is not stated in the accounting standards. So basically the point is D. Okay, it does not include that. Now we are talking about AS2 again. When we talk about the AS2, the historical cost of the inventories should be normally be determined by using. Is it going to be FIFO? That is first in and first out. Whatever comes first in the organization, it goes out first. First in, first out in weighted average. Then we have FIFO and LIFO. Then we have LIFO, that is last in and first out and weighted average, or FIFO and simple average. When we talk about the historical cost of inventories, should the ones which are basically the value should be determined using FIFO as well as the weighted average. This is one which is normally used, right? You'll find it in the particular accounting standard. It is stated that the weighted average method also includes the value of computing it cost, while FIFO keeps it separate. When we talk about FIFO and LIFO, there's one difference. In terms of FIFO, whatever comes in the organization first, it goes out first. That is FIFO. In terms of weighted average, whatever is there, we consider their weights and then find out the actual values. That's what we find in terms of the AS2. Now moving on to the next question, that is regarding reserve capital. This is from the company accounts there. Then we have the area of reserve capital, portion of subscribed or uncalled capital. Then we have portion of uncalled capital or called on liquidation and decided by passing a resolution. Is it 1, 3 and 4, 2, 3 and 4, 3 and 4, or 1 and 4? When we talk about the reserve capital, it's just like earlier what used to happen, now though we have a particular different way. When we talk about the scooters, then there was a particular thing that was stated that in terms of scooters, there's a reserve. That means it is just near about its end. It's better that we refill the tank again. In our cars, even after a certain point of time, it blinks, right? The petrol amount is less, then we get it refilled again. In an organization, but what happens is they keep a certain amount of money for the scenario when it would be like the organization is dying. It's near about its death and we are still falling short in terms of the payments. So when we fall short, it's better that we collect the money from people who are basically shareholders of the company, but from whom we haven't collected or asked them any money yet. So that is basically the capital which is not called and we have kept it till the liquidation of the company. So the correct point would be the first one is called, then we have 1 is there, 3 is also there, and we have also the decided by passing a resolution, because you cannot just idly just go and ask people whatever was left kindly give it to us. No, you have to pass a special resolution, only then you can do it. So basically the portion of uncalled capital cannot be specified because these shares are already allotted to someone, but only the money isn't asked for. That means subscribed uncalled capital is correct. It is called only by the end of the winding up of the company. At the same time, it is not done directly. It is done after passing a resolution, having a word with the shareholders, and now calling them up. Right? That's there. Now moving on to the next question, that is security premium is a dash and is a dash nature to the company. When we talk about the security premium, is it credited and the gain of the capital nature, debited and the loss in the capital nature, credited and income of the revenue nature, or debited and the loss of revenue nature? When we talk about the security premium, it is basically credited and it is of a capital nature and it's a gain for the company. Think about it. We asked people that you need to give us 10 rupees for one particular share, and all of a sudden we said, halt, you need to pay more. A company is bigger, you need to pay more, and this specific amount is our security premium. So when we talk about the security premium for the company, it is a gain, no? It's a gain for us. It's a gain. Then what we need to do here is credited in the capital nature. Security premium is credited. It is shown on the credit side, and then it is something which is a gain of. Again, it's a gain, not a loss for the company because we're charging more. Right? Now moving on to the next question, that is what is the formula for the operating ratio analysis? Again, a very important data to cover. Then it is cost of production plus admin divided by net revenue from operations, cost of production operating expenses divided by revenue from operations, cost of operations plus operating expenses divided by net revenue from operations. Then this is for cost of production, cost of revenue from operations, cost of revenue from operations plus the selling expenses. When we talk about this area, we calculate the entire cost of the manufacturing in terms of the goods. Along with that, we add up operating expenses, which includes selling as well as admin expenses. Both of those expenses are there. That means if I look forward to it, then here the administration are there, selling are not there, and here it is not included. The problem is whether to include the cost of production there or the area of cost of revenue from operations. It is basically cost of revenue from operations plus the operating expenses. The term operating expenses includes both admin as well as selling. Right? Now moving on to the next question. Next question is the nature of interest on calls and arrears. If someone is unable to pay the calls, we ask them again and again. That is where it is a calls and arrears, and when they are about to pay us the money, we charge certain interest for the delayed payments, right? So it is basically a nominal account and is credited in the profit and losses income, nominal and is debited, personal account and is shown as an asset, or personal account and shown as a liability. When we talk about the nature of interest, interest is basically a source of income. It's an income now. If it's an income, it would be shown on the credit side and it's a nominal account. So these kind of accounts are taken on the credit side because we are charging interest from the people, and since we are charging interest, we are getting money. That's an income for us, and incomes are shown as a nominal account and incomes are credited because that's the rule for nominal account. Debit all the expenses and losses and credit all the incomes and gains. Right? This is the answer. Now let's move on to the next question. the working capital turnover ratio, that is called the WCTR. How is it denoted? Is it net working capital divided by net sales, COGS upon working capital, then GP upon working capital, or the none of the above? This is one of the turnover ratios. The beauty of turnover ratios is that it is directly linked with the COGS or the sales. So there what we do is either the COGS is taken as the numerator, or the net sales is the denominator. Any of these, or net sales is also called RFO, revenue from operations, divided by working capital of the company, which is shown as current assets minus current liabilities, right? So in this case, the answer would be COGS upon working capital. The answer is C. Oh, sorry, B. COGS upon working capital, right? That's right. The point was B. Now moving on. This is the end for the session. Thank you so much for joining. And if you haven't subscribed to our channel, then what are we waiting for? Kindly go ahead and subscribe our channel. And at the same time, don't forget to press the bell icon, so you'll be able to see the notifications whenever the new classes are coming up. The AFB class is there on Tuesday, Wednesday and Thursday in 7:30 in the morning. So kindly be there. And if you're looking forward to any of the courses regarding the bilingual batch or the English medium batch, for both the batches, what you can do is you can visit our website or our app for further details. There you'll find it. If you go to the area of, once you've opened the Adda 24/7 app, there you'll find JAIIB and CAIIB classes. There we have the bilingual batch. It is starting from 5th of September. And that would be starting from 5th of September. That includes both PPB, AFB and LRB. Morning time 6 a.m. to 10 p.m. The planner is given there. Why should you look forward to this particular area? Because here we have live classes, we have ebooks, we have test series for you. At the same time, if you are unable to attend the live class, you can also look forward towards the recorded class that would be available for you. Then you can review the classes as many times as you want. If you're not able to get it in the first go, or you want to revise it again, in both the cases the recordings would be available for you. And at the same time, there would be more than 120 hours of the classes. The faculty is basically given here. In terms of the faculty details, we have it here, that there are around 73 test series and overall 67 ebooks are defined there. The study plans are also given regarding the plans. And if we go forward towards the end, you'll find it, the area of click on buy now and use the code Y541 and then apply it. You'll get a discount of 77%. That means this particular batch will cost you 3,679.77. And if you go through the app, it would be an additional discount will also be there. So it's better that you go towards the app rather than the website in terms of the working. And at the same time, from the app, it is easier to study as well. On your phones, it would be more accessible. Then at the same time, now let's move on and let me tell you about the batch. This batch is starting from 5th of September, the bilingual batch. This is bilingual batch. That means the notes would be in English but taught in both English as well as in Hindi. Now moving on, if we talk about the English medium batch, the English medium batch would be starting from 12th of September. This is here. Let's look at the batch. Here, click on the area of buy now. This is starting from 12th of September. You can use the code again by 541 and you can apply it, and there you'll find a discount again, the same price, 3679.77. The difference is there in terms of bilingual as well as the English medium. In English medium, you'll find the entire teaching would be in English, while in bilingual the notes would be in English only, but the teaching part would include both English as well as Hindi. So whatever you feel you're comfortable with, so you can check it out on our website or on our app. So if you're looking forward to the JAIIB November-December attempt, then you should always look forward to it before time. This particular batch is starting in September. That means you still have ample of time to prepare. At the same time, you can review the study planners for a better review that by what time you'll be able to finish off the syllabus. So keep on learning. Thank you.